Eric Muadith, Mother.com. It is November 11th, 2016. Today we are looking at gold, which is down about 1.7% right now in terms of the GLD. If you take a look at the gold index proper, you'll see that it is down about 30 points. It's a huge drop today. Let's take a look here. So you can see here, gold is down about 33 points right now, 2.6%. The GDX is also down about 4-5% for the day. It's been down pretty much the entire week. And if you take a look at the following video, which is a segment of a video I made when gold was trading at the highs of the week. So as we began the week here on Monday and late last week, we were expecting a pullback, and the video will explain what we were looking at the time. So this pullback in gold is consistent with our analysis. Keep in mind, today we are seeing a big drop in terms of the gold daily movement. Why? Because it is moving below 30.9 on its daily RSI. And on the weekly, we are looking at the GLD, which right now is down about 5%, mainly because the RSI moved below 50 on the weekly RSI time frame. Anyway, let's take a look at the analysis I did on Monday when the GLD was trading here at about 124, 123. Peace and blessings. Oh, by the way, you might want to check out my analysis this weekend, because I'm going to have some analysis on gold that could be a little bit different from what you expect in terms of next potential trend for gold. All right, let's go to the video. Enough talking. I am out. Mwah. Eric Muadith, Mother.com. It is November 7th, 2016. Market's been open for about 35 minutes and close to the highs of the day right now. As you can see, Dow is up about 264 points. And this is how other markets are trading. Let's just get this in the video and see here that we have crude oil, which is up about a percentage point. Gold is down about 1.5. Other European markets, for example, the FTSE is up 1.6. And so let's take a look at those charts. The market's only been trading for 30 minutes, so let's not get ahead of ourselves. But I would like to discuss with you what I see right now. Let's begin with the Vanguard Total Stock Market ETF. And one thing we should watch out here is the possibility of very good support. So right now, it is back above 50. Now keep in mind, market's only been open for 30 minutes. We have an entire week of trading ahead of us. So let's not get too excited. But this is how things start developing into a bounce. And you can also see here, this is uniform activity below the 50 level on the weekly RSI and back above it. Again, here we have to be aware, or at least sensitive to the idea that this is the beginning of the week. Who knows where the week is going to end? So a little bit of a caution there to not make too much of a conclusion yet, because it is very early on in the week. But this looks okay as long as the market can bounce and show uniform activity here. This is where we might start seeing a recovery of recent highs. Now if you take a look at a 5-year weekly chart, just want to show you why this view also adds on to the thought here that it could end up being good support based on this line connecting previous highs. As you can see clearly here that once we moved above the green line, so let's call it this period here, which is this entry, the market has been higher and continues to trade higher. We came here, we touched the 50 level and also touched the green line on a back test, successful bounce for the re-entry there, and now we are doing the same thing here. So in my opinion, this looks like good enough support to stop the recent slide. And of course, we have to wait to see where the market closes for the week. But if the market can sustain current levels and actually build on the current movement, then this is where we might start looking for reasons why we should be bullish. Now, if you draw this line here, let me change colors here. So give me a second. So if we take a look at this line somewhere around there, this blue line has been used as support by the market going back many years. You can see uniform activity here, support for the re-entry there, late 2011, double bottom support on the same line for the 2012 lows, and again here for the lows of late 2012. We tagged the same line with uniform activity for this re-entry. Now keep in mind, all these re-entries were very successful. As you can see, bounce, 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 bounce. And then again here, we eventually recaptured back above that line there for another bounce. Short term though it was. Here we have nice uniform activity below the line and back above it with a double bottom. All right, for another re-entry. Now you ask, how is that? Well, what you have to do here, so let me just draw this again here, is draw a line in between those two levels there, and you can see it's uniform action on this side and also on this side. At any rate, let me bring back that line. It's slightly higher than where, so right there. So we had another entry right here for the recovery. That was their entry there. Market moved higher, and again here over the last 2 weeks and including today's move, early on in the week, we are seeing that it is holding that green line without asking too many questions, without knowing what the future brings. That is good enough support. Let's take a quick look at gold here as it begins the week. Just a quick look, and we can see that some of the things we were talking about yesterday are coming into play. You got weekly RSI resistance. Of course, it's very early on in the week. Okay, that's not good by itself. Short term for gold. Also, if it holds for the week, you can see we've gone back below RSI 50, suggesting the possibility of a big down week. We shall see. Also, keep in mind we talked about watching that 123.65 level. So this previous weekly closing high, we were using that to give us a number we can watch for bullish or bearish action. Right now the market is below that number of 123.65, which is this weekly closing high. Because we are below that, we have to conclude that net right now gold has gone back to its bearish movement lower. Keep in mind on the daily, we drew two simple lines that were obviously right now we see the market respecting that. You got topside resistance. I mean, it tagged that perfectly as of Friday's close, and also we had drawn a line connecting the resistance levels of this high here, and that line is also right now being confirmed as legit resistance levels.